Hello, everybody. So we had what I call a technical dip, a suck on chance. Because yesterday the Nasdaq bouncing 12%, well, that's not really normal. A lot of short squeezes were happening. So we had a bit of a drop, about 4%, drop 4.3%. Yesterday was plus 12%. But it's okay because, most of our stocks were up 20 to 30% yesterday. It makes sense to me that we would drop a little bit today. Although, if you're trying to buy Bitcoin on the cheap, you're kind of out of luck because Bitcoin is still behaving like a stable coin. Today it closed at 79.8 and it opened the day in the morning. It was at 81.5. At one point it was at 81.1. So from like 81.1 to 79.8, where is the vol? Where is the vol? Where's the love, Bitcoin? Come on, where's our vol at? Well, the love is not with Bitcoin. I'm having fun today. No, the love is with MicroStrategy. The volatility is with MicroStrategy because MicroStrategy oscillated fast again today. As I say, MicroStrategy has one leg in fiat and one leg in yawn-inducing Bitcoin. And because of that fiat leg, MicroStrategy is able to oscillate fast and it's able to really generate, returns for options traders and for people who options portfolios, people who do the wheel, etc. As I like to say, MSTR is the high-octane racing fuel of the best options portfolio out there. The volatility is alive on MSTR. MSTR is this volatility machine, and really the minus 8% we got in MicroStrategy is nothing for us MSTR people. It's nothing. If you've been holding this stock, it's like a Tuesday. A minus 8% on MicroStrategy, plus 25% was noteworthy yesterday. I really liked it. But anyways, the volatility is alive, and what this means is that he's going to be able to issue more preferred, issue more converts, and generate that BTC yield for us. And I think MicroStrategy is a wonderful stock to own. It is, depending on the season, my number one or number two position. I'm still at number one right now because Tesla dropped more. Anyways, let's talk about another stock that was down quite a bit today, and it's minus 9% today. It's HIMS and hers, back near $25. Of course, it's funny because so many of us, when the stock was trading in the 50s and the 60s, were like, don't be surprised when it gets back to 25, because this is not the first time this stock has had a precipitous drop. Because HIMS, the volatility of HIMS can be really understood by the total lack of understanding by the market of this company. This company goes from being dismissed to being dismissed, right? It was first dismissed as an ED pill company. Now it's dismissed as a GLP-1 company. Never mind the fact that it's less than 15% of revenue for a GLP-1. Who knows what it's going to be dismissed for next? But the market, Mr. Market just doesn't like disruption. They don't like the HIMS disruption. They think that healthcare is the world of rent-seeking, and the market only understands rent-seeking. As an example of that, HIMS, of course, down 9%. United Healthcare, I'm trying to be sarcastic here, but United Healthcare, you may know, it's a company that's known for a superb net promoter score. People recommend to their friend a lot. Very high NPS for an insurance company, and they're not facing a disruption at all. I've never heard of any backlash against UNH, right? That doesn't exist. Have you heard of that? But, Mr. Market loves UNH because UNH is the big rent sinker. Unfortunately for me, I didn't enjoy the upside, right? I did not enjoy making money on UNH today because it's not in the Nasdaq. It's only in the S&P 500. No, UNH is not in the Nasdaq. And so, unfortunately, I do not enjoy as much rent seeking as people who own the S&P. Unfortunately, I'm being sarcastic. Mr. Market knows that HIMS is an awful business model. HIMS' business model is around customer satisfaction. It's around making people happy. They don't charge you for the doctor visit if they can't help, for example, and they refer you to a third party, or they tell you you're healthy and don't try to sell it to you. I tried inputting my information to see what they would tell me for GLP-1s, and they told me I didn't qualify. They told me my weight is normal. They're not going to prescribe me a GLP-1 if my weight is normal. So anyways, that's just the way this business works. I think HIMS is a highly ethical business. Perhaps the topic of a video later on. HIMS is what? HIMS is an e-doctor plus an e-pharmacy without insurance, and it's without insurance because of the e part, because it's digital doctors, digital pharmacy. You don't have to pay for a network of 45,000 pharmacies in the US. There are 45,000 pharmacies. You don't have to pay for that physical network, and we're overbuilt. There's too many medical office buildings. There's entirely overbuilt. Today, a lot of doctors can just work from home, from their living room, do telehealth, and so that too, we don't need to pay for these mansions. These hospital facilities, or medical office buildings, which frankly sometimes are very, very opulent, and you don't need that. You just don't. You can just do everything from your phone. And so, the e-doctor plus e-pharmacy managed insurance, that concept, it will never disrupt the cash cow, the bread and butter portion of healthcare, right? That cash cow, that's never going to be disrupted, right? The easy physical, the easy cases, those are never going to be disrupted. Am I right? And of course, I don't think that. I think the easy case, I think the cash cow, I think where most insurance companies are going to be disrupted by businesses like HIMS, like Row, like LifeMD. And so, then you better hope they don't have a lot of debt, because if you lose, say, 10, 20% of your customers, if you have no debt, that's fine as a company, but if you have a lot of debt, that's when the house of cards can collapse. Anyways, finishing up with Nvidia, Apple, Tesla, and robots. And you're like, what am I talking about today? Why do I want to talk about this? Well, as you know, on this channel, I have a 10-year plus horizon. It's frankly multi-decade for me, but I talk as though most people on this channel wanna have a decent return over a 10+ year period. So if I enter a stock, well, sometimes I'll have fun and deal with my itch to trade, and sometimes I can do a trade, but generally a big position, generally for me, it's a 10+ year horizon. And one of the biggest opportunities not priced in today, in Nvidia, in Apple, in Tesla, that opportunity is robots. That opportunity is bots. And that opportunity is not priced in today. And you were like, why did I talk about robots today? What am I talking about? That's because I was reminded by one of the top trending stories of the day on X. I was reminded that this opportunity is real. Of course, I've always thought it was real, but it's always good to watch a video to get reminded that this opportunity is real, and this opportunity is actually coming sooner than most think. So I suggest you look up the latest Unitree video. So this is the Unitree boxing robots, and I just watched like a 1 minute fight between the robot and this, what I assume is an engineer. I wouldn't know. Anyways, the point is that's so impressive. Like, the engineer knocks down the robot this one time, and the robot just bounces right back up and gets back to fighting him. This is quite impressive. I think we're gonna witness a special moment in robotics, in physical robot, embodied AI, as Nvidia calls it. We're gonna witness that moment pretty soon, where you may remember IBM beating Garry Kasparov. I was a little young, so I don't remember that, but I definitely remember AlphaGo beating Lee Sedol, right? And if you haven't watched that documentary about Google's AlphaGo, right, one of the latest, most advanced forms of AI before the GPT systems that Google also pioneered. It's a stunning documentary about how a computer was able to beat someone at the game of Go, and we never thought this would be possible. So anyways, highly recommend this documentary. And of course, when I see this, I tell myself, okay, well, are we going to have a Mike Tyson versus Unitree boxing bot match in a few years? And is the robot going to win? And who I would bet on? I would bet on the robot, but I don't bet. So anyways, are we going to get to that stage, right? Imagine that. It could be one of the most broadcasted fights in that sport. And of course, Unitree is talking about they're going to have a fight between robot next month that they're going to broadcast. So this is real, right? This is not science fiction anymore. And if you don't think it's real, watch this video. It's pretty darn stunning, the progress. And so there's 3 stocks that were on sale today related to that revolution. Of course, Nvidia is what most people think about Nvidia as all of these real physics model where you can train in the AI before you actually build the robot. Nvidia also has a lot of investments in anything AI. They have a big investment in Figure AI. Figure AI is the competitor to Tesla, to the Tesla Optimus bot. So Figure AI is the competitor, and if you want to invest, Nvidia and Jeff Bezos, one of the biggest capital creators in the history of the world, the guy that pioneered customer centricity, right? He thinks that's going to be a big thing. And so does the founder of Nvidia, and so does OpenAI and Microsoft. And so Nvidia, I think, is a good way to get exposure to this embodied AI revolution. Tesla, obviously, with Optimus Bot, even though everybody makes fun of Optimus Bots, the videos that I see once in a while, I find absolutely stunning on the Tesla bot. And the newcomer of the day, of course, I wouldn't include Apple 2 months ago, right? Because Apple was much more expensive 2 months ago. Apple is looking it's a trade, right? It's looking more like a trade to me than anything. But Apple is so cheap right now, relative to where it was, looking at it through the lens of a trade. But I do want to say something about Apple's potential role in robotics. I've been reading a lot of things that the 2,000 plus AI engineers that were on the self-driving car project, they've been moved to the robot project. And Apple may now be working on a robot of its own. And so, making a car making a car is, I've argued before that making a Tesla is closer to consumer electronics, but what's even closer to consumer electronics than an electric car is a robot. A robot is much closer to consumer electronics, and so I would not underestimate the ability of Apple to catch on that opportunity. Now, maybe Apple needs a new CEO. Maybe, I don't follow that stock too close, but maybe that CEO is a little too conservative, a little too much into buybacks, and perhaps less of a visionary. But I think this is an opportunity that Apple could also take on, and they need big opportunities to move the needle as the world's largest company. So anyways, I think this is an opportunity that came to mind today, and it's good to be reminded, and let me know. I'll get back to my regular video schedule as soon as the market stops being crazy. And don't let me know, actually, because I'll do a video on bots and robot companies and the opportunity that this could be. So anyways, thank you so much for watching. This was not investment advice, not financial advice. This is just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.